So there needs to be some changes in the restructuring of loans, underwriting perhaps at the banks? Is that what you're saying?
No, I think in supervisory guidance, it should be, there should be more flexibility, not only in not criticizing banks for working with borrowers, but there should be more flexibility when they say reduce your concentration in real estate. And, you know, office loans are not an enormous part of bank lending. Commercial real estate is an enormous part of local and regional
We
banking.
got about $2 trillion coming due, though.
Yes, but not in office. Okay? So I just think there needs to be a better distinction and not a monolithic treatment of commercial real estate.
Okay.
There should be incentives to treat restructured loans where equity has gone in. Those should be now classified as performing loans. It's almost a new loan. I would urge that regulators start to acknowledge that not all commercial real estate is the same. The office market is where the main problems are, and instructing institutions to lower their concentration in commercial real estate may mean that they're not making loans to perfectly credit-worthy borrowers in another asset class. But even in office markets, there are notable differences. Some individual owners are facing considerable pressure, potentially leading to foreclosures, as you mentioned, defaults, and large losses of equity. At the same time, many top-tier modern office buildings with strong ownership and workplace amenities are currently weathering the storm. I think that also there's so many mortgages that were originated in the period of historically low interest rates that are now coming up to be refinanced, and there's 500 basis points roughly higher on the Fed funds rate.
Yeah.
That makes it very, very difficult to refinance commercial mortgages under this environment.
So that's a good question, because we've experienced this before where we've had a cliff. I mean, do you see this as a cliff effect where you've got a lot of commercial loans that are now hitting their expiration date or coming up for renewal, and they're going to have a dramatic increase in their interest rates? Do you see?
I would not necessarily term that issue as a cliff. It's more of a slow-moving train wreck. As these mortgages come up, they're restructured. The meetings are going on with lenders. Some aren't going forward, some are. So as it kind of builds up, it's not overnight problem, I guess I would say.